Hello, everyone. And today's session, we're going to talk about the business tax, that is Financial Act of 2020. And in today's session, we're going to practice few questions from the AAT website, that is Sample Assessment 1. And this exam is quite straightforward, and we have only 2 hours to complete 11 tasks in the exam. So the exam will be really, really quick, and all we have to be well prepared so that we can finish the exam within that deadline or within the time limit. The first thing you have to remember how many questions are going to come in the exam and from which area. So you can make yourself ready. And if you are confident and if you are know the stuff from this course, it's not going to be very difficult, to be honest. And the exam will be really quick if you know the thing. But if you don't know, it's going to be very hard for you to complete the task. So let's have a look how many questions we have. We have 11 questions in the exam and we have 2 hours to do. And let's start with the first question that we have here. The first question we can see here, and that is task 1, and that comes from the calculation of the corporation tax, and this mainly for the adjustment. Now we already know, like when we have a corporation tax question, we have to understand the difference between the accounting profit and the profit for the tax purpose. So for example, when you prepare the accounts, you prepare the accounts based on the accrual concept. On this accrual concept, we have so many things that we deduct and make the profit a little bit lower. For example, the depreciation we treat as expense. For example, we if we have any political party donation, we deduct this one as expense. For example, if we have any sort of like donation, we minus it. And if we have any capital expenditure, we minus it. But not everything is allowable for the tax purpose. So HMRC said, okay, even though if you have a trading profit, accounting profit, you have to adjust to find how much is your trading profit. Now remember, the accounting profit is from that particular accounting period, and the trading profit is the profit that you make from only from the trading, only from the business. So the difference mainly comes from, because when you sell a capital asset, for example, if you sell a fixed asset, for that reason, maybe the profit is coming, and because of that, the profit is going up. But for the taxation purpose, you really don't have to worry about the capital asset selling or making the profit from the capital asset. Why? Because this is not your trading. Once you have the trading profit, then you can adjust a few things to find how much is your taxable profit, and the tax will be calculated on that amount. Let's have a look what we have here. The first one we have here, it says general provision for the irrecoverable debt. Now, provision for the irrecoverable debt is never allowed, so you have to add back. So that means this one you have to disallow and add back. The provision for the irrecoverable debt means, like, some people in future, they are not going to pay you. And because of this irrecoverable debt, you're keeping some provision in advance. So you're keeping some money separately or keeping the allowance. So this is not allowable expenditure. But if the person is completely like bankrupt, or if the customer said, I'll not be able to pay at all, then you can claim this one as an expense later on, but you cannot keep the provision for that. So there is a little bit difference. Once the customer is already mentioned, like I cannot pay you, so, and this is a recoverable debt, and that will be your expenditure for you. So you're going to reduce the income, so you can claim this one as expense, but you cannot keep the provision because some people are not going to pay you in future. So this is disallowable, and you have to add back. That means you have to increase the profit and you have to pay the tax on that amount. The next one, we have a donation of 1,500 to a political party. Any sort of donation you pay to the political party, it is disallowable. You have to add back. So you cannot pay the political party, even though your accounting profit will be lower, but for the taxation purpose, you have to add it back. Then we have a bottle of whiskey costing 45 with the company logo on the side, given free to the customer. So this is basically the customer entertainment. So you cannot do that. So any sort of customer entertainment is disallowable, and you have to add back. So if you pay, if you give anything to the customer and entertain your customer, it is not allowable expenditure for the tax purpose. Interest received, it is like basically it is disallowable, but you can deduct later on. So basically this has happened when you have some savings on your bank, and what happened because of the savings money, you receive some interest. Now this interest doesn't come from the business directly, so it is not your trading income. It's not you selling something and you're getting the interest. No, it is like money coming from the ISA or from the individual savings income, and for that reason it is disallowable, but you can deduct it. You can say it is not my trading income. So first you have to add back, and later on you can deduct it, or you can deduct it at the first go, and you can later on you can add back, because you can say like, oh, this is not my trading income, so when I'm getting the trading income I have to add it back, and later on you can say deduct it, and you can say later on, no, I have to pay tax on that income anyway, so I have to add it back. So this one have no impact. When you have interest income or interest received, this one don't have overall impact on the tax calculation, because first you take away, later on you add it back. Repair to the factory doors, this one is completely allowable, because if you do repair for anything, repair and maintenance, it is like wholly and exclusively for the business purpose. So definitely it is allowable expenditure, and you can always claim this one as a allowable expenditure, and this is completely allowable. Profit on sale of a refrigerator, so this one is not your business. So when you're selling a part of your fixed asset, or you're selling the fixed asset, this one is a disallowable and you have to deduct it. The reason is it is not your trading income. So for example, when I sell a fixed asset, if I make a profit, then chargeable gain will be increased. So I have to pay capital gain tax, not the corporation tax. So for example, if I'm in a business of selling this pen, that means if any profit I make by selling this pen, this is my trading profit. But if I sell a computer, so selling the computer is not my business. So that will create the chargeable gain. And on the chargeable gain, we have to pay capital gain tax, not the corporation tax. Remember that. Even though the threshold or the way of calculation is almost same, but still you need to understand the difference. It is not my trading profit at all. All right, so let's have a look, a little bit more explanation, what else can come in the exam, so how we can treat that. So there are a few more examples here. Let's have a look. So here we can see we have a trading profit. Now, profit for the year per account. So this one from our accounts based on the accrual concept. So accrual concept we have used, and based on that we prepared the accounts, and the account shows the profit is 1 to 200. From here, all we have to do, we have to take away the dividend received, because this is not my trading income. So I said dividend received means I have invested somewhere and they're giving the money. So that's not my trading income. So obviously I'm not gonna add it as a trading income. So I take away profit on investment. If I invest somewhere, if I receive something, that's not my trading income. Interest received, I keep some money on the bank, I receiving some interest because of that, that's not my trading income. So I take away everything. And after that, I add back qualifying charitable donation, because I said, oh, this is not my trading expense. I just give some donation charity. So it is not my trading expense. So I have to add back. And the depreciation, it is not my trading expense. So I have to add back. And if there are any capital allowance, we take it out. And after, I'll get my trading profit. So this one tell me exactly how much profit came from the actual business, actual trading. That is 87,700. And now I'll do the adjustment. What is the adjustment? The interest, I'm going to add it back. Remember, we take it out here, we add it back here because we have to pay the tax on this amount. Now chargeable gain, if I make any chargeable gain, I have to add it. And after that, I less is there any qualifying charitable donation, I minus it from here. Even though I added here, I minus here again, and that will give me the TTP, total taxable profit, and I have to pay the tax on this amount. Now you might thinking like, what's the point, this one and that one? First, I'm minusing and adding back because I'm looking for the trading profit. So when I have to find the trading profit, anything that is not of the part of the trading, I have to adjust it. Remember that. All right, I think you understand this one. Let's move to the next activity. What we have here, the next question we'll have from the basis period. This is one of the very important area from your business tax paper. So make sure you understand it very well and do enough practice. Okay, so let's try to understand. So This question we have here, let's read this question first. Martha started trading on 1st February 2020, making up her first set of account for the 15-month period to 30 April 2021. Her adjusted trading profit were agreed as period ended. So period ended means like 15-month profit is here. So 15-month profit is included here. So 94,920. Year ended 30 April 2020. So that is 61,980. All right. Show the taxable profit for the second year and the third year. So they're asking for the second year and the third year, not the first year. In the table below, complete the date and how much you need to pay on the calendar year. Okay, show the calendar. So it's not a big deal. Just need to find the basis period. Now, basis period is a very, very tricky area. Make sure you have a very, very good understanding, because in the exam, you will definitely see the question from the basis period. Now, basis period, normally we have to remember 3 fiscal year. So fiscal year 1, so FY fiscal year 1 and fiscal year 2 and fiscal year 3. We have to remember 3 fiscal year. Now the first fiscal year is all about the day you started the business, from that day to 5th of April. So for example, this person started business on February 2020. From here, I have to find till 5th of April 2020. So any day you started the business, from that day you have to end up to the 5th of April. Even though we have always calculated 6th of April to 5th of April. So it started 6th of April to next year, 5th of April. But remember, you really don't have to consider this 5 or 6 days. It's just like tax year. So for calculating any amounts, if you like to calculate any amount, like the proportion of the profit, you really don't have to consider this 5 or 6 days. So you only consider the full month. So you really don't have to consider this 5 or 6 days. Either you complete the consider the full March or the full April. You really don't have to consider all of this. All right, so let's have a look what we have here. So the first one we have here, that is taxable year. So they said show the second and the third. Second and third. So the first one is from February 2020 to 5th of April 2020. So you don't have to care about that, because the question said you have to show the second year taxable profit and the third year. So second year and third year. So second year will be obviously like when you said April 2020, that means this tax year means 1920, because tax year 1920 will end on 5th of April 20. So from 6th of April 20 to the 5th of April 2021, that will represent 2021, isn't it? So you're going to say our next tax year will be 2021, and start from 6th of April. So let's do that, 6th of April, 6th of April, and 2020, and we'll have up to 5th of April. 5th of April 2021. And here we need to see how much will be the profit. Now let's have a look. The profit we have for the period of 15 months. So for the 15 month is 94,000. So 94,920 is for the 15 months. So we have to find the profit for 12 months, isn't it? So let's try to find that. So profit for the 12 month. So we have 94,920 divided by 15 times by 12. And that gives us 75,000. So we said divide by 15 times by 12. And that will give us 75,936. So we're going to write it down here, 75,936. The next year, how much it will be depends what is the situation for the next fiscal year. Now, before we go there, I want to show you some workings, how the fiscal year work. It will help you to understand more. So let's have a look, some workings for the fiscal year. All right, so if you have a look here, so the first fiscal year is very straightforward. Tax profit arising from the first day of the business to end of the first fiscal year. So that means the day you started the business, from that day up to 5th of April. So this one is very straightforward. This is the main area you have to be careful. Fiscal year 2. There, if they said, does the trader have period of account ending in second fiscal year? So that means the period we have in this question for the 15-month, is it end up with the second fiscal year? Now we know our second fiscal year, that is 5th of April 2021. But unfortunately, our period is ending after, that is 30 April 2021. So our answer will be no. And that's the reason we took 6th April to 5th April. This one we already recorded for the second fiscal year. If the answer is yes, then we have to find how long the period was. It is 12 months, it is less than 12 months, it is more than 12 months. Then we have to find the different calculation for that. For this question, you have to say no. So the second fiscal year will be from 6th of April to 5th of April, that we have already recorded. Now the third fiscal year will be tax 12 month to the period end. Is a very, very important, this one. The tax 12 month to period end. That means the first period end. If you remember, the question said the period was for 15 months and it was ended on April 2021. So what will happen for that? I have to take the first 12 months again. So I have to come back from the April. So if it is end in April, that means it started on May, isn't it? So May, June, July, August, September, October, November, December, January, February, March, April. So here is not April. So obviously, let's have a look how much, when is the year is ended. Let's go back to the question and let's have a look when the period is ended. It's very, very important. So we have to understand that. So our first period is ended on April 2021. That means it started on May, isn't it? So the first period, we need to calculate 12 months. So 1st May 2020 to 30 of April 2020. Isn't it? Because if it is ended on April, that means if I go back 12 months, it starts from May to April. Now you can see this one is a little bit tricky. So what we understand from here, we understand the first one, we took the second fiscal year, that is from here you can see 2021, and we took 6th to 5th April. Because first fiscal year finished from February to April, February to 5th April 2020. So from 6th April, from the next day for the 2021, so 6th April to 5th April, that is 2021. This one we recorded for the fiscal year 2. As the fiscal year didn't finish, because we are end up with the April, and 2021 supposed to be end 5th of April, not 30th of April. So it touched 2021 to 2022. So it is more than 12 months, and it didn't finish on that year. So we have to take 12 month, the period end. So for the third tax year, so we can see here for the third tax year, we have to go back from the April to 12 months. That is 1st of May 2020 to 30th of April 2020. So you might thinking like, why are we taking the 2020? Because that's the rules. That's how we calculate the basis period. And you might think, oh, we are calculating the same profit again and again. That's true. And that's why we have to see how much is the overlap profit inside. So what's happening here? So let's have a look. The next one we need to do here for the 21 and 22. Because it starts the April, and from 6th of April 2021, it already started 21 to 22. So that's why we have to consider here, and we take the 12 month. So 1st of May 2020. So we'll say 1st of May 2020 to 30 of April 2020. 2020. And how much will be the profit? So the profit will be kind of same, because if we take 12 months from here we have a 15 month, isn't it? So from the 15 month, if we take another 12 month, it's going to be same thing. So it will be again 75,936. So that's how we have to calculate. So if the fiscal year didn't finish with the next fiscal year, if the period didn't end with the second fiscal year, we have to take 12 months back from the period end. So you have to be very careful. You make a note by yourself the way you're understanding more, but this question will be in the exam. Make sure you practice well that area. Now let's have a look. What is the overlap profit? Now the overlap profit is very simple, because we calculate from 6th April to 5th April, and again May to 30th of April. That means only 1 month we can see we did an overlap. Rest of the 11 month is overlap anyway, because from 6th of April to 5th of April, and here we take from May. So that means that we already take April, May, June, July till next of April. So all the month we have here until like March, only 1 month, April, 30th of April is not overlap, other than in 2021 and 2022 is kind of we calculating the same month, because 6th of April to 5th of April, we already take the May, June, July, everything. So 11 month is overlap. Only the last month, 30th of April is not overlapped. So we say it, 11 month is the overlap. So here we have a 12 month. So it says 75,936 divided by 12 times by 11. And that will give us 69,608. This is the overlap profit. Overlap profit, the profit we have calculated twice. We already accounted for that early, because here we can see from April to April, we already take 12 months. And here we take from the May. So that means till March, 5th of April, we already taken, only the April is not. So this is the only month. We don't have to worry, this no overlap. Other 11 month is already included here. So that's why 11 month is the overlapped. All right, so let's move to the next question and let's have a look what we have there. So here is the question number 2. Let's read this one. This question look like from the partnership. Dan and Nick are in partnership trading as state agent with an accounting year and 31st of March. They share profit 3:1, and on 1st of August 2020, they started to take salary, share profit 65.35. So that means we have a 2 period here. So up to 31st of August. So from 1st of August, their profit issue change and they start taking the salary. And before August, that means up to 31st of July, their profit share was only 3:1, and after that it changed, share the profit this. From 1st of August, they also started to take the capital interest, and the salary and the contribute capital are shown below. Okay, that's fine. So you have to find like what is the proportion. So from 31st of July, what will be the situation? And from August, what will be the situation? It's not a problem. So let's try to understand. Taxable profit year ended 31st of March 2021. So up to 31st of March is a year ended. That means here is a 12 month. So 71,460 is for 1 year. And we have to find how many month is where. So if the year is ended 31st of March, that means the year is started from April. So April, May, June, July, 4 month. April, May, June, July, 4 month and 8 month. We have to have a 2 separate calculation. So let's find it out. How much is the profit for the 4 month? So 71,460 divided by 12 times by 4. It gives me 23,820, and the rest will be here. That is 71,460. That is my rest of the profit. That is 47,640. So this is my next profit. So we have to separate the profit for 4 and 8 months. This profit we have here, they are saying 3:1. So 3 is for the Dan, 3:1, and 1 for the Mark. So let's try to do that. 23,820. The first one is very simple because there is no salary, nothing up to August. So you really don't have to worry about that. So divide by 4 times by 3. and that gives me 17,000. So then share profit 17,865. All we have to, we know how to do it, isn't it? So 23,820 and divide by 4 times by 3, and that will give 17,865. That's how I shared the profit, and the rest is for the NIC. So NIC will be the rest. So that is 5,955. Now we have to calculate the salary from 1st of August and the interest on capital. So interest on capital, 3% of 15,000. So let's try to do that. So 15,000 times 3%, that will give us 450. But the interest on capital is started from August, isn't it? From 1st August. That means for 8 months. So we have to do 450 divide by 12 times by 8. That gives us 300. Everything we take from 1st of August for 8 months. 8 months, because 4 months you already calculated here. Then NIC have the same thing. So let's have a look. 6,000 times 2% divided by 12 times by 8, and this gives me 80. Then you have a salary, same way. The salary is 9,000 per year. So we have to take for 8 months only. So 9,000 divided by 12 times by 8 is 6,000. So 6,000 is the salary for Dan, and the same way 3,000 for the NIC. Now share of profit. If you remember, this is the profit was left. So from there, so it said 47,640. When you minus the interest on capital, that is 380. Then you minus the salary, that is 9,000. And that will give us how much profit is left, isn't it? So let's try that. 47,640 minus 380 minus 9,000. And after that, they said the profit will be divided on whatever is the profit left. 65% for Dan and 35% for Nick. So whatever is the profit left, we split between 65% to Dan. So that is 24,869. And for the Nick is 35%. So that will be 13,391. That's it. It's not the difficult one. Let's move to the next one. The next one we have here, the calculation of the national insurance. That's quite easy. It's not very difficult one. So let's calculate the class 4 national insurance contribution. 63,560 is the income, so taxable profit. So let's try to find it out. So we have to break it down, to be honest. The first one is a 9%. So let's try to do that. We have a threshold that is up to 50,000, isn't it? So it said up to 50,000 will charge 9%. And after that, it is 2%. So 50,000 and up to 9,500 is exempted. We don't pay any national insurance up to 9,500 taxable profit. So let's do that. 50,000 minus 9,500 times 9%, that gives you 3645. 3645, this is fixed, 3645, because the threshold is up to 50,000 and the lower threshold is 9,500. So if it is 9,500, you don't pay any national insurance. If it is up to 50,000, is 9%. Anything additional is 2%. So we said 63,560 minus 50,000, and on the difference you do 2%, and that will give us 271.20. That's it. That's not the difficult one. All right, so let's move to the next one. Let's have a look. What is the next one we have here? Question number 3. So tax number 3 is mainly from the capital allowance. So let's try to understand what question we have here. Says Oscar is a builder and operates as a sole trader. He has the following fixed asset information for the year ended 31st of March 2021. Now, obviously, like you have to remember all of these things. If you remember your first year allowance, FOIA, that is only for the electric car, and the car is less than 45 gram. Then you have to remember the WDA, that is written down allowance. You have a special pool rate that is for the WDA 6%. You have to remember your AIA, annual investment allowance, that is only for the plant and machineries. So this thing you have to remember, otherwise it's going to be difficult for you to calculate that. So let's have a look. Balance brought forward as at 1st April 2020, that is like the opening balance. So for the general pool, we have a 68,585. Then they have a car. The first car he have, that is CO2 emission, that is 115, that is more than 110 gram. And if it is more than 110 grams, so you cannot put on the general pool, so you have to keep on the separate pool column. And there's a 20% for the private use, so you can only claim 80% allowance. 20% you'll not be able to claim that. Computer serial number 156, estimated life 5 years, when purchased 2018. Remember, if any asset and the life is less than 8 years, we called it short life asset, SLA, short life asset. And for the short life asset, we calculate a separate column, we keep the separate column, and we find is there any balancing allowance. So if we sold that asset, we find the balancing allowance. If we don't sell it, we keep it in a separate column because it is considered as a short life asset, and we have a different treatment for that. Make sure you read what is the definition and how you do that short life asset. Then in addition, we have some purchase. On 7th June, we have a new car 2, and the CO2 emission, that is 45 grams. So this is completely FYA, first year allowance, because anything that is 45 gram or less, obviously this one will have a first year allowance. That means you will get the full allowance from there. So you really don't have to pay anything, any tax, nothing you don't have to calculate. So anything that is like electric car, or if the CO2 emission is 45 gram or less, so you will have a full exemption on that. Even though there is a private use, doesn't matter, you will get the full exemption. 1st October 2020, new lorries. Lorries will be comes under the AIA. This is the investment. So if there is a investment on the plant and machineries or like lorries, then you can claim AIA, that is annual investment allowance, and that is there is something that you have to remember. Annual allowance is changed on 2021, and before it was different. So you have to read that so that you don't know, like sometimes the question can come like this portion, maybe you have to take few months with the different allowance and few months from the different allowance. So make sure you read that AIA allowance and how you apportion that. Then we have here then we have another car number 3, that is like 125, that is more than 110 gram. If it is more than 110 gram, you have to put you have to charge a special rate, and the special WD is 6%. Before it was 8%. So if the question give you the date that is before, like 2020 or before 19, so you have to remember like the rate was 8. So maybe few months you have to calculate with the 6%, and few months maybe with 8%. So to make sure, like this chapter, capital allowance could be very tricky. Make sure you revise it very well. Then you have 1st December, Oscar car 1. So the disposal, they sold something. So this is the disposal. So the car is sold 8,500. The plant is sold 8,650, and the computer is sold 600. So if they sold anything, most likely it will be the balancing allowance or the balancing charge will be created. So any asset, if they dispose, either the balancing allowance will be created. Balancing allowance will give you the positive figure. So for example, if the opening balance was 10,000 and if you sold it for 8,000, so 2,000 will be the balancing allowance. If it will end up with the negative figure, that means it's a balancing charge. All right, so there is a big boxes here. Let's try to do that. So first, we're going to write all this allowance we have, that is FYA, first year allowance. Then we have the next one, AIA, annual investment allowance. So let me write it down. And we'll take the general pool. So let me write it down and I'll show you after. That will be quicker for us. So let's quickly write it down. All right, so here is the answer for that. Let's have a look. How does it work? I'll quickly explain that so that it will make you more clear. So the first one you can say FYA, that is first year allowance. So this is only for the car. Remember that first year allowance is only for the car, and the car is electric car or any car that is like less than 50 of 45 gram emission. So we'll have a full year allowance. So this car is car number 2 that we purchased 21,850, and there is nothing. The balance is 0. You can see we get the full allowance. Number 2, we have by some lorry addition, and the lorries was 1168,000. That is more than 1 million. But we know the maximum annual investment allowance we have 1 million. So any difference that will go to the general pool. Remember that. So if you buy any plant and machinery or any asset that is qualified for the annual investment allowance, and for reason if it doesn't cover the whole allowance, any difference will move to the general pool. After on the Oscar card, we can see card number 1. That one we have opening balance, that's from the quotient. This one general pool have opening balance, that's from the quotient. And SLA, this short life asset 800, that's from the quotient. So it's opening balance. Then we have here disposal. So we have a disposal for this one. There's a plant, we sold it for 8650 from the quotient. They said like we sold this plant for 8650, so it will be minus. Anything we dispose of, it will be minus. You can put the bracket, or if you put the minus sign, there is no problem for that. You will get the full marks anyway. Then we have Oscar car 2. This one we sold it for 8,500, so it's a minus. And that computer, short life asset computer, we sold it for 600. This is all our disposal. After the disposal, you have to find the balance. So if we say this plus this minus this, it will give you this amount. That's the balance. And this minus this, it will give you the balance of that. And this minus this, 800 minus 600, that will give you the balance of the 200. And after you find the balancing allowance, as I said, the positive balance is always balancing allowance. So we can see the opening balance was 9675 and we sold it for 8,500. So the difference gave me the positive balance 1175, and we take it out from here and we say it is our balancing allowance. Now you might thinking the balancing allowance was 1175. How come it is 980? Because we can take only 80%, because 20% was the private use. Cannot take the private use, only the business use 80%. Then Oscar car 3, we sold it, and that is we have here 18,685, and we sold, we didn't sold it, we still have it, and we can claim the WDA, written down allowance, that is 6%. We calculate that, and again we have 80%. Let's say 20% is a private use, so 80% of the 1121, it will give you 897. Then we have a WDA 18%. That's for the general pool. Remember, if the WDA for the special rate, this one is a special rate, and that's why it is only 6%. And so normally the general pool is always 18%. So when it is a special rate, you need to remember that, you need to read that question, because when it doesn't fulfill the condition for the general pool, then it will go to the special rate. And the special rates happen when the car emission is more than 110 gram, and you have to find the special rate. And we have a balancing allowance because we sold it for 600 and the opening balance was 800. The balance is positive balance, and it will go as a balancing allowance. So you can see at the end, we don't have any balance for the FYA. There is no AYA left. General pool will have a carried forward balance. The car is anything disposal will be 0. So this one will be 0 because it's disposal. Disposal, as soon as you sold the asset, there will be no balance carried forward because you take the balancing allowance on the allowance, and the car has to be go, asset has to be go because it is gone, you disposed it. And this car didn't sold yet, car number 3, this will have a carried forward balance. So capital allowance and the basis period, this two area will be very tricky. So you have to keep some special time. You have to revise very carefully this two area for the exam purpose. All right, so let's move on to the next question. Let's have a look what we have there. Next question I have from the partnership. Let's have a look what information we have here. Says in the table below is the information needed for the completion of the 2021 partnership tax return for Andrew and Son, a firm of builders. So they're the building company. So builders. Year ended 5th of April 2021. Then we have a trading profit. We have a CIC tax deduction by the contractor, and we have a bank interest received. Okay, three information is not a big deal. So I think not many information we have. So you have to just say how much is the trading profit, how much is the deduction, which box we need to include that, and how much is the bank interest, which box we need to deduct that. Okay, so start the year. Basically, year is always 5th to 6th of April. So you start from 6th of April and finish on 5th of April. So they are saying for the year ended 2021. So it will be started 20. So that will be started 6th of April 2020. And it will be ended 5th of April. So 5th of April 2021. This is the tax year 2021. Okay, nature of the trade is builder, so builder, builders. So you can say builders, and after that, all you have to do, you have to fill some box. It's very simple. So profit from a trading, the question gave it to us. How much is the trading profit? That is 62,688. 62,688. This is the trading profit, and we don't have any adjusted changes, nothing. No remuneration, income from the untaxed savings. Yeah, we have a savings, so income from the interest or bank savings income. This one we have 1486. The question gave it to us already, and we have CIC deduction. That is 6325. 6325. And I think that's it. You really don't have to do too much, but obviously it's maybe not that simple in the exam. So you have to know the whole boxes, how to fill it up. So you can look at your question bank. There are a few questions there for the partnership, and you need to make sure you know like which boxes, what information you have to fill. And this one is not very difficult anyway, so you can see it. All right, let's move to the next one then. Let's have a look what you have the next one. So in this question, task number 5, we can see we have the limited company question. So let's read this one and try to understand. L Limited has prepared account for the 15-month period ended 31st of December 2020. So for the limited company, you really don't have to worry about the basis period. So you have to split the thing. But we have to remember a few things that is based on the accrual basis and few things that is based on the actual basis. So this thing you have to remember. Other than it's not a big deal. It's not a big problem. So let's have a look. Taxable profit and charges for the period are shown as below. Taxable profit or charges. So we have a trading profit, we have a bank interest receivable, we have a rental income, and we have a gift and donation. So then what is the requirement? Calculate the apportionment of the taxable profit, okay, between the two accounting periods. Because the period is 15 months, we have to split it between two period. That is 15 month, you have to say like 15 month, you have to split between 12 month year ending and the 3 month. So we'll have a two accounting period. We cannot do like a basis period the way you do for the unincorporated business. So let's try to do that. So we have a trading profit. The trading profit, we have 238350. So 238 and 350 divided by 15 times by 12. And that will give me for the 12 month, that's the first accounting period for the 12 month. So that will be 190680. So all you have to do, you have to divide by 15 times by 12. And it will have the another one, the next accounting period for the 3 months. So that's for the 12 month, that's for the 3 month. So for the 3 month, we do the same thing, 238,350 divide by 15 times by 3. And that will give you 47,670. All right. The bank interest, the same thing, 3525. So divide by 15 times by 12. 3525 divided by 15 times by 12 is 2820. 2820. And the next one is 705. Rental income, the same way. So we have total 12,750. So 12,750 divided by 15 times by 12, it is 10,200. And the next one, 2550. The gift donation, remember, the gift donation will be the actual basis, not the proportion. So you don't have to do the proportion. There are a few things that you have to do the actual basis. So make sure you read that chapter and you understand which one you have to do the actual basis and which one is the portion basis. So that will help you a lot. So gift donation happened when? 14th of November. And our year is ended, period is ended 31st of December. That means it's not coming this period, it's coming on this period, just before the end of the period. So November means like after November, there's a December. So that means it comes under the last 3 months, not the first 12 months. So I'll take 5,200 only here. Now, there are a few more items that you have to remember. For example, if there's a property income, rental income up to a certain limit, then you do proportion. If it cover up to a certain, if it is cross the threshold, then you have to use the actual basis. And there are a few things that you have to portion and you don't have to portion. So make sure you make a list of that so that before the exam, you understand actually like which one you have to split, which one you don't have to. So I think that's it. It's not a big deal. So let's try to find what is the next one we have. The next one we have here, I'll calculate the corporation tax. Calculate the corporation tax payable for the 2 accounting period. It's very simple. You have to find how much was the trading profit, how much was the total income, and after that you do 19%, that's it. So if you remember your trading profit for the 12 month and the 3 month. So let's say for the 12 month, trading profit was 190,680. That's from the previous question that we have done, 47,670. And then we have a bank interest that is 2,820 and 705. Then we have a rental income that is 10,200 and that is 2,550. And the gift donation, this one is minus from here, 5,200, 5,200 minus. And after that, what is the amount come? We do 19% on that, 19% tax. So do 190,680 plus 2,820 plus 10,200 times by 19%. And that gives me 38,703. And the next one will give me 8688. That's it. And they're saying the next one, they said Plasma Limited is a trading company, had an accounting loss for the year ended 31st of January, 48,000. So they make a trading loss, okay? The loss was calculated after a depreciation charge for the year 12,750. Remember that depreciation is a non-cash item and it is not allowable expenditure for the tax purpose. So if you said, oh, my loss is 100 and the depreciation is included, so that I minus the depreciation, that means your loss is not 100. You have to add back the depreciation. So that means you have to reduce the loss. So for example, if I said my trading profit is 100 and my depreciation is 50 and my profit is 50. So actually your profit is not 50. You have to go back to 100 because depreciation you have to add back. So now you're saying your loss is 48,950, but actually your loss is not 48,950 because you minus the depreciation, and depreciation you are not allowed to take away for the expenditure purpose. So you have to add it back. So if you add it back, so what we'll do, we have to reduce our loss. We said it's not our loss 48, it has to be less because I already minus the depreciation, but I'm not supposed to do it. So I said 48,950, I'm showing a loss, but actually I need to take away the depreciation to show less loss because depreciation cannot increase my loss. So my actual loss will be 36,200. Because of the depreciation, I cannot make more loss and I cannot carry it forward the loss so that I minus it from the next period or from any other gain. All right, so that's not very difficult one. Let's move to the next one. Let's have a look. What is the next one we have? The next one we have here, that is the balancing payment. This is again from the question how to make payment on account and the balancing payment. It's a very important area, could be tricky as well. So make sure you revise this area very well. Okay, so let's have a look. Dylan has been trading for a number of years, and his liability to income tax and class 4 national insurance as follows. So they already calculated for us the tax and the national insurance. They are saying for the 17-18 is 3678, 18-19 is 4856, 19-20 is 5860. Okay, complete the following payment schedule, following dates, amount due that Dylan will pay in the calendar year 2021. Complete the dates basis period, so we understand that anyway. So they are saying how much Dylan has to pay to the HMRC during the calendar year 2021. That means calendar year means January to December. So start from January, it's not the tax year. Calendar year from January 2021 to December 2021. Between this period, how much you need to pay. Now remember, when this is the situation, the amount of the tax, the way the sole trader or the self-employed paid, so he have to pay any balancing charge, any balancing payment. So balancing payment. Also, he need to pay first POA, first payment of account, that is paid on 31st of January. And also he need to pay second POA, that is second payment of account, that is 31st of July. This is a fixed period you need to pay. Now, the balancing payment depends how much you already paid before and how much is the payment left. For example, here, I'm sure you already know how it works. So if I'm a self-employed, what happened for this year, if my tax liability is, for example, 5,000, and I have to pay 5,000 now. Also, I have to pay 2,500 in advance. This is called payment on account. So I'll pay this 5,000. Also, I'll pay another 2,500 at the same time, 31st of January. At the same time, I will pay half of the liability for this year in advance for the next year. And this is called payment on account. So I pay in advance for the next period. I pay this year full, and half of the tax liability I'll pay in advance. So here we can see they are saying how much will be the payment for calendar year 2021. So we have to pay, the first thing we have to pay, that is the balancing payment. So we have to see how much it is. Let's have a look. The balancing payment, let's find it out, balancing payment. And always have to pay 31st of January, remember that. Balancing payment and the payment of account, always 31st of January, always. So 31st of January, we have to pay, and 2021, because the question said how much you need to pay, 2021 only, calendar year. And the payment time will be the balancing payment. So here it will be the payment year 2021. So for the payment year 1920. So 1920 I paid 31st of January 2021. Remember that my year, if the year is ended, for example, 1920 tax year started from when? Started from 6th April 19 to 5th April 20, isn't it? And we have to pay after next year, 31st of January next year, that is 2021. So for the tax year 1920, the period from 6th April 19 to 5th April 20, I have to make the payment to HMRC 31st of January 2021, that is next year. So for the 1920, I have to make the payment 31st of January 2021. I'll make the balancing payment. How much is the balancing payment? So that is, what is the difference I paid last year? So I already paid this one. This already paid as a payment of account. Payment of account, as I said, we paid in advance. So this one we already paid in advance, 4856. So when my liability is 5860, that means on this liability, on the last year I paid in advance 4856. That is already paid as a POA, payment on account. I already paid in advance. I only find the difference, and this is called balancing payment. So balancing payment, this year liability and something I already paid in advance, the difference is called payment, balancing payment, and the difference here is how much. Let's have a look at that. So we have 5860 minus 4856, that is 1004. 1004. This balancing payment I have to pay now. So I'll tell HMRC, listen, I already paid two payment of account in advance before, and now I'm going to pay only the balance. So my this year tax liability is 5860, and out of that already 4856 is already paid. The difference is 1004. I'm going to pay it now. And the next one is like payment of account. So if my this year liability is 5,860, that means I have to pay this year as an advance as well, isn't it? So 5860, if this is my this year liability, how much? 5860, I have to make two payment of account. One is 31st of January, same time I'm paying the balancing amount. One is 31st of July 2021. So I'll make it half, 50% and 50%. I'll pay in advance. So I'll do that. Let's do that then. So I'll say this one is a 1004. Okay. Then the next one will be 2021. So 2021, I'll make the payment again. So I'll pick the tax year will be again same year. Need to pay the calendar year. That will be 2021 anyway. That's my taxable year. And I have to pay 31st of January. Remember that the balancing payment and the first payment of account both are 31st of January. So I have this one, and I have a payment type that will be first payment of account. First payment of account. How I find this one? 50% of the 5860. So I said 5860 divided by 2, and that will give me 92930. 20 and 30, that's the 50% of that. And another 50% I'll pay 31st of July, same year. 31st of July. And the same calendar year, 2021, I have to pay on this year. And the tax year will be 2021, 2021, isn't it? 2020 and 2021, because 2021 will be ended on April, obviously, like 2021. So this is the one we have to understand how we are working on that. So any amount that is belongs to 1920. So this is the 1920. You can see we paid after the next year, January. This is the balancing payment. So how much I already paid, I find the difference, I paid the difference. And after that, 2021 on 31st of January, so I pay in advance. So for this year, 2021, it's not done yet, the tax year, but I'm paying in advance. This is called payment of account. This will be the 50% of the current tax liability. And again, I paid for the 2021 for the same year, second payment of account. This one also I'm paying in advance, same amount, 50% of the current tax liability. Current year tax liability, 50%. That's it. So make sure you understand this one and revise well, because this will be definitely in the exam. All right, the next one we have, Sun Unlimited has an accounting year, 31st of March 2021. Complete the following sentence. The latest date for filing the corporation tax return. Okay, it is 12 months. Remember that. If it is like year is ended 31st of March 2021, then they can submit the tax return by 31st of March 2022. It's very simple. So if the year is ended 31st of March 2021, they can submit by filing the corporation tax return or CT600 by 12 months. So the latest date will be 31st of March 2020. But remember, this is the filing date. This is the filing date for the corporation tax return, but not for the payment of corporation tax. So payment for corporation tax is a 9 month 1 day. So they have to pay the tax by 9 month 1 day. So if the year is ended 31st of March 2021, they have to pay the tax. Tax has to be paid by 1st of January 2022, isn't it? 9 month 1 day. So tax has to be paid 1st of January 2022. That is 9 month 1 day. But the filing for the corporation tax they can do within 12 months. So they can do 31st of March 2022. So don't mix it up. Paying the corporation tax, the deadline will be 9 months and 1 day, but filing for the tax return is 12 months. All right, I think like we have done up to 6 questions today. I think that's enough for today. So obviously I'll try to make one more session so that we can cover the whole question. And hopefully it will help you to understand more and make sure you are revised well. This tax paper could be very easy if you know everything, otherwise could be very difficult. And if you need any help from me, you can email me. You have my email on the description, and feel free to ask any question you have, and if I can, I'll try to help you. And thank you very much everyone for watching the video. I'll see you maybe in the next session.